to get together with our counterparts from other countries, other markets, to share ideas and see what developments are taking place across the continent. And tomorrow we have meetings of the Association of Securities Exchanges of Africa, which will look at market issues on a continental scale.
Of course, the Nairobi Stock Exchange is the largest exchange in East Africa and a key exchange when we're talking about African exchanges. This comes at a time when you've got the Kenya rights issue underway. It's the largest that you've had at the exchange. What is the significance that this holds for the exchange at this time?
Well, I think the Kenya Airways rights issue is a landmark transaction. We as an exchange have had a good relationship with Kenya Airways since the privatization and listing in the 90s. And it recruited a lot of new investors into the market and helps us to develop that all-important equity culture. This transaction is big, and we are hopeful that investors will be persuaded by the very convincing equity story that Kenya Airways has. They have a very good track record, and they have very sound business plan going forward.
Let's talk about the issue of regional cohesion and cooperation amongst African exchanges, because the JSE recently cancelled the Africa board. It didn't work. What are you seeing as an opportunity for how we can go forward from here and how we can enhance trade amongst African bourses and increase cooperation? What is the next step?
I think countries take pride in having exchanges, and that's only natural. It's part of the patriotic feeling of a country. So for me, the model going forward would be for us to develop strong institutions within countries and then seek to link them, to integrate them using technology and other means so that we have one pool of liquidity, but you also satisfy that need for a national champion, if you like. So
what is your focus in Nairobi? What are you doing in order to improve the domestic exchange?
Well, we've done a couple of things. The most important step we've made, I think, is the demutualization of the exchange, which is now substantially complete. We have a new company limited by shares. We have shareholders. We have a new charter and so on, and we have a new board now for the last 1 month. So the remaining step is for us to seek a self-listing on the NSE, which should happen sometime in the course of next year, which should improve governance in our market.
What portion of the NSE is going to be listed then? And as you say, next year, because I saw reports of it being in 2014, so that's clearly being brought forward.
Well, we would like to do it sooner rather than later, and to seek to list anywhere between 30 and 50% being offered to new shareholders. But of course, the entire equity of the company will be listed.
In terms of the market cap that you've got right now and your targets, you're sitting with a market cap of just over $10 million. Do you have a target like Nigeria has in terms of how you'd like to grow the exchange?
Yes, we do. We would like to grow our market, not just in terms of market capitalization, which is currently 10 billion, just over $10 billion. We would like to increase that to about 50% of GDP. But we also have targets for the number of listings. We want to increase the number of listed companies from the current just under 60 to somewhere near 100.
So what is the time frame for doing that? Because we saw listings coming to the market last year and the share prices haven't performed as well as one would have hoped. So how do you attract companies to list on the exchange in light of the fact that so far the listings have underperformed?
Well, I think the performance in the aftermarket was impacted by the bear market overall. But having said that, we currently have 2 companies that are seeking to list this quarter, and perhaps another 2 before the end of the year. And as the market improves, which is really our outlook for the balance of this year and going into next year, the case for listing will become more and more compelling.
In terms of the companies that are on the table for listing in 2012, I know Deacons and Family Bank have put their hands up in terms of wanting to come to the market. Can you give us clarity on those 4 companies?
Well, the other 2 would be Longhorn, which is a publishing company, and CIC Insurance, which is an insurance company. And both of those companies have also made public their intentions to come to market this quarter.
Of course, you've got a very active bond market as well. So what are the plans in order to increase the exchange and trade of the bonds, as well as other alternative products that might enhance overall activity for the market?
Well, we have recently automated the trading of bonds. That led to a spike in the activity in the secondary market. And there are ongoing initiatives to introduce market makers and make the markets even more liquid. But we also are hoping that before the end of this year, we will have an alternative market for mid-cap, smaller companies, what we have called the growth enterprise market segment. And this should really be attractive to younger, more ambitious, fast-growing companies who can access capital from the market and also be able to share their upside with investors.